What's good, everybody? Hope you guys are doing good. So we are back today for another stock analysis video. This video I'm going to talk about Disney. Before I continue, in case you guys are not following me on Twitter, what are you waiting for? Go ahead and follow me. The fun never ends. I'm pretty active on there. If you send comments or you send me a message, that's the best way I'm going to respond to you. If you have a request, any questions, that's the best way to do it. Twitter/pphumbleproductions. Same thing. And I'll leave a link in the description of the video so you guys can check that out. Alright, now let's continue. Alright, Disney. Now, I'm sure you guys are aware. If not, I'll put a link in the description below. I sold all my Disney stock a while back. I know. What's happened lately? Look at this. It's just been rallying like crazy. Today it's up 8.8%. And on August 4th, yesterday, it was at 117. Now it's 127.6. And I'm sure you guys are probably laughing, saying, look, you sold out on Disney and now you're getting destroyed. Now, here's the thing. When I sold out of Disney, it was recently announced they had their dividend cut, which for me, if you guys know, I'm a dividend investor. That's an important part of my strategy. That works for me. I need dividends. I just need that flow of cash coming in, and I can reinvest and I can grow. That's what I do. Now, when they cut dividends, I got to take a step back and say, okay, how long do I think it's going to be for? Is it permanent? Is it temporary? And I got to assess a whole bunch of things that work for me. With that being said, it is something right now to kind of keep an eye on, that it is going back up. I'm not going to buy into it regardless. I'll explain in a minute why not. However, their numbers are decent. I mean, market cap of $230 billion with a B. It is a mega cap. PE ratio is kind of high of 43. Dividend yield, they cut their dividend, so the yield is probably old. And their 52-week high is 153. 52-week low is at 79. Now, before I forget, the time that I sold it, I was in the red, but not by too much. It was like less than 20 bucks. So if I want to sell out, that's kind of something that I set up for myself, is I don't want to lose too much. So if it's like 20 bucks or less, I'm okay with selling it for my smaller positions. Disney wasn't ever one of my bigger positions regardless. It was still relatively small. So by taking a minor loss, it didn't really hurt my portfolio too much. Okay, so let's go over here. One of my favorite websites, as you guys know, a great tool, and the trial version is free. Simply Safe Dividends. Now I typed in Disney, and here's what we got. Right now it's at 127.61. Today it's up 8.8%. Market cap 212 billion. Volatility of 1, which is average. The one thing I like is they give you the news that's going on lately, so you kind of have an idea of what's going on with the dividend. Dividend safety. Disney does not currently pay a dividend. So that's the issue I have. They currently don't pay a dividend. On May 5th is when they announced that they were cutting their dividend, and since then we haven't had any news that I've seen about them reinstating it. On April 23rd, it was unsafe, so it just kept on dropping. So March 12th, it was safe. April 5th, borderline, and then it was unsafe, and then unrated because they had cut it. Prior to the dividend being cut, though, last year the growth was 2%, very slow. Last 5 years, it was 9%, which is considered fast. And the last 20 years, it was 11%, which is considered fast. Now, if you look at the chart here, they've been paying since 2000, and they were gradually increasing it. So it fits my parameters, right? I like a company that is raising dividends over time. So if you can have a company where the dividend yield is growing and the stock value grows, I mean, that's how I want to do it. That's what I do. So that's what I look out for. Now, the thing is, they pay semi-annually, which means they only pay twice a year. Reflecting on Disney stock, that's kind of an issue as well, because it's going to take you longer to compound the interest and reinvest. That's why, like I said, once they cut it, I was kind of okay with it because of everything that's going down. Now, why did the stock skyrocket, right? There's various reasons why, but I have a few tabs. I'm going to break it down for you guys so you can see what's going down. So this is from CNN Business. Mulan. Everybody knows Mulan, right? You remember back in the day, Mulan, the cartoon version. That was a good movie. And the toys they sold at Burger King and McDonald's. Disclaimer, I'm long McDonald's, but those toys were pretty awesome. Mulan is finally heading to Disney Plus for $30. This is a very interesting strategy that I think more streaming services and big films might do for a couple months with everything going on, because they're going to have to do something, right? They got these films that they made, they spend millions of dollars, and they can't show it in theaters because theaters are still shut down, and once they open, they're probably going to be limited capacity, and even in that case, who really wants to go to the movie theaters? A whole bunch of questions that come up. Now let's go over this really quick. Disney's Mulan has been delayed several times this year because of the bug outbreak, but audiences will finally be able to see the blockbuster soon. It just may not be in theaters. Disney announced on Tuesday that the remake of the 1998 classic, and that's true, that film was a classic, will be headed to Disney Plus, the company's new streaming service, for an additional fee of $29.99. The film will be available on September 4th. Like I said, guys, this is a brand new strategy that we have yet to see huge box office films going to streaming. We've seen, obviously, Netflix and Amazon Prime and Disney, they have the Mandalorian and all that good stuff, but we're talking a major blockbuster film that was made for theaters going to streaming. That's something that might be a trend going forward. So let's see what the CEO, Bob Chapek, had to say. It's forced the company to think of different approaches to better serve consumers. We thought it was important to find alternative ways to bring the exceptional, family-friendly film to them in a timely manner, he said on the company's third quarter earnings calls. Okay, so this is good. If you are invested in a dividend-paying stock or any stock, one of the big mistakes that I made back in the day, and I will make a video at some point, I have a bunch of videos that I want to make about my mistakes when I first started to invest. One of them is definitely this: earnings calls. It can be very, very useful to know what a company's direction is, where they're headed, what they're doing, and to see if you want to invest more, if you want to get into that company, if you want to invest less. The earnings call can be a great tool to help you decide what's going to make sense for you. Let's continue. Alright, so the CEO, he added that Mulan will be released simultaneously in theaters and markets where Disney Plus is not available, and of course where theaters are open. So it looks like they're going to have a combination of some theater release and some Disney Plus release. Now here's what's going to be interesting, guys. Let me know in the comments below. Do you think that the film is going to be more profitable in theaters or going straight to streaming at the moment? I think that's going to be a very, very interesting number to see which one is going to be more profitable, because usually theaters, they make a lot more money from it, but with everything going on, maybe the streaming service is going to make more from it. I have no clue. If I had to predict, I'd say probably the streaming service might make more for this film, because like I said, I don't know if people are comfortable going to theaters, but on the other hand, I could also see people have been locked up in their homes for a while. Some states are a lot more strict with their restrictions than others. People might just want to get out and do something, and this might be a good way for people to get out and do something, even with the risks that are currently at the moment what we have to deal with, right? So we're gonna have to wait and see. Overall sales for a company fell 42% to $11.8 billion on the bright spot Disney Plus, Disney's new service, which the company says has more than 60 million subscribers. So that's a crazy number, guys. 60 million subscribers. What does that tell you? A lot of people are at home. A lot of people just want to sit back and watch something and chill. And probably, I know some states the schools are opening, but some states are still closed. Parents might be like, hey, let's just pay for the service. Kids can watch it at home, and parents can do whatever they gotta do. And it's a win-win. Okay. The film was set to release in March, pushed back several times. It was recently set to premiere August 21st, but was taken off the calendar at the end of July. Disney's release of Mulan on its service for additional costs, yet another disruption to the movie theater industry. Yeah, this is huge, guys. I mean, who knows, like I said, going forward, if this does well, maybe films that are blockbusters are going to just go straight to streaming, and ultimately, who knows what's going to happen with the movie theater experience, right? I mean, at one point, people would drive in to movie theaters, and then now people were going to theaters, and then we got the IMAX experience, and then now with everything going on, people might be more paranoid or conscious of their health and not want to go to theaters because they'll be scared, which makes sense. It's understandable. Universal and AMC, the world's largest theater chain, made a deal last week that allows new films from the studio to play in homes sooner. Universal's new films will now just have 3 weekends or 17 days of exclusivity in theaters rather than the customary 70. After that, Universal and its sister studio Focus Features has the option of releasing films to video on demand platforms. Very, very interesting. Did you guys know that? I did not know that. Universal's new films will now have just 3 weekends or 17 days of exclusivity. So, like I said, they're definitely pushing back on this thing and realizing where the market is headed with what they're doing. I mean, that's pretty insane. Like I said, there's a lot going behind the scenes that we don't know with how the contracts work, but this is definitely going to be a game changer. Alright, and this is from Yahoo Finance. Of course, Disney stock has been all over the place. Like I said, 8.8% increase. Overall, though, the markets have been in the green. The S&P, the Dow, the Nasdaq, Russell, crude oil, everything is in the green. Now let's go down. Let me see. I want to see about Disney, because this is a Disney video. We are trying to be focused. $30 to watch Mulan on Disney Plus, either outrageous or an amazing deal, depending on who you ask. Like I said, I'm going to be very, very interested to see how this turns out, because one can say, hey, $30 is a lot. You go to the theaters, you pay $10, that's already a lot. However, when people are streaming it, it's not going to just be them watching it, right? It's probably going to be a family experience, or they're going to have their friends over. I mean, that makes sense why they would want it at $30. I'm not saying right or wrong, but I can understand what the thinking is behind having it at that price. And going through it, there's not really a whole lot. Oh, here you go. Walt Disney stocks jumped 9.06% among the biggest boosts to S&P 500 in the Dow, and was on track for its biggest daily gain since March 24th, as revenue declines for its park and media networks were not as bad as feared. That played a big role too. I guess opening the parks, they thought it was going to be a lot worse than it was, and the stock reflects that. What is happening, not just Disney, but the market is general, and everyone is completely buying into the Disney move to streaming. But then, if you do look at the theme parks, the data for the US at large has gotten much more positive lately. When we were at least getting initial indications, we are sort of over that hump, said Sean Cruz, Senior Manager of Trader Strategy at TD Ameritrade in New Jersey City, New Jersey. Okay, let's continue on. Disney shakes up streaming approach after losing nearly $5 billion due to the bug. Company released Mulan for pay-per-view on Disney Plus in areas where theaters are not open, and launched a new international streaming offering as other businesses flail because of the bug. Man, that movie in the 90s, when you're a little kid watching it, that thing was a classic. And I know they're making these live action stuff. I haven't really watched too much of them, but I guess people are still enjoying it because they're making them. Okay. Now, let's go over this, see if we have any new information, because like I said, guys, I'm just bringing you the facts, and you guys can decide what you want to do with it, and I like to get different sources to confirm what we're reading. $30 to view the film on September 4th. We see this as an opportunity to bring incredible film to a broad audience currently unable to go to the movie theaters, while also enhancing the value and attractiveness of a Disney Plus subscription. Yeah, I mean, who knows? Maybe they release Mulan, they charge $30. In hindsight, you can either look at it and say that's not that much or it's a lot, but who knows? Let's say after that they gain another million plus subscribers. It might be a brilliant move, and their stock might just go up that much more. Disney shares initially dropped off 2% after results, but they rose about 10% in the morning trade Wednesday following the twin streaming services announcements. Disney shares are down 19% this year, while the broader market is up 0.64%. It's up 2% in 2020. Like I said, the Mulan movie could help drive the revenue, which could give Disney a huge boost. Disney could use the revenue help. Sales plunged 42% in the third quarter. And let's continue on here. Their theme parks, the biggest cause of the downfall was the theme park business free falling to less than $1 billion in sales. Yeah, Disney makes a lot of money off those theme parks, and once they were closed, they lost quite a bit from those, because also you got to keep in mind the cruise, the hotel, everything was shut down for a while. Okay. Disney also recognized a gain of nearly $400 million from its investment in DraftKings, which went public in late April. Disney has invested in the daily fantasy and sports gambling website when it was a startup, and said its investment has appreciated by $382 million, which landed on Disney's bottom line. So there you go. They also own DraftKings. Like I said, when you are doing your research, this is all things you got to know. Okay, this company, what did they invest in? What are they buying out? What's their direction? The earnings call, very important. Despite record losses, Disney stock soars thanks to streaming news. Despite troublesome figures in the earnings report, Disney stock saw dramatic gains on Wall Street as parks are closed, but streaming is huge. Yeah, who knows how much the streaming thing is going to help Disney out. It'd be pretty crazy. I mean, like I said, this run-up is pretty insane, but if their streaming service goes through the roof, the stock might be a bargain for those who are looking at Disney stock. It could be a really good value play in just a little bit of time if you wait. Okay, let's see, anything else here we got? We would not be surprised to see the stock grind higher as anticipation builds. Yeah, like I said, if this thing goes through and it works, it's going to skyrocket the stock. Disney's market value soars by $21 billion after Disney Plus hits 60 million subscribers. This is from Markets Insider. Let's continue here. Oh, here we go. This is good. They made it easy. They outlined it for us. Disney stock jumped as much as 10% on Wednesday, adding more than $21 billion to the entertainment giant's market capitalization. Investors celebrated the news that Disney Plus has attracted more than 60 million subscribers in its first 9 months. That's impressive, guys. Only 9 months, and they got 60 million. However, Disney's revenue plunged 42% last quarter as the bug-related closures of theme parks, stores, and cinemas hammered its business. Lower revenue and $5 billion in restructuring and impairment charges. Yeah, as you can see, their streaming service is all they got right now that's really helping them out. The parks are kind of gaining a little bit of traction, but this subscription thing, that's a crazy number. 60 million in 9 months. Impressive. Disney has won the first stage of the streaming wars. Disney announced Tuesday that Disney Plus has surpassed 60 million subscribers, well ahead of Disney's target. The company predicted it would have 60 to 90 million subscribers by 2024. At this rate, they're going to pass it up pretty quick. While estimates have been overly conservative and several unusual factors have helped Disney, it's hard to envision any scenario where Disney Plus isn't a winner in the streaming wars. Yeah, I mean, if they're going to be pushing some huge blockbuster films, they're going to definitely come out ahead. Because who knows, if there's another film that Disney was going to release to theaters and they decide to just push it to stream, Mulan is a high budget film, guys. I mean, if you think about it, all these other streaming platforms, how many of them are pushing films with a budget like Mulan? Right? Just a food for thought. That's going to be crazy. Streaming wars. Let's continue on, see what else we got here. Okay, here we go. With 193 million paying subscribers, bearing catastrophe, Netflix will be one of them, and I'm ready to call Disney Plus a second winner. Yeah, Disney Plus and Netflix are probably going to be, they're going to be going head to head. It's going to be an interesting battle to see who comes out on top. Disney, staggered by the bug, sees a streaming boom. Company lost 4.7 billion in the last quarter, but also report Disney Plus 60 million after 9 months. At this point, we can confirm the numbers seem pretty accurate. Theme parks were kind of opened up again. For the most part, limited capacity. They had all these rules. I put in my video. I'll go over you can see it in the link below if you want to see what's going on at the moment. Now here we go, guys. Let's wrap this thing. Let's get close. This video is getting kind of long. Should you buy Disney stock? A long-time blue chip stock, Disney will likely recover from the blow from its theme park closures. This is from US News, the money section, investing. Another tool I like to use. Okay, let's continue on. Let's see. Here we go. Pros and cons. Okay, that's what we want. The pros. One of Disney's pros is the portfolio of strong brands. The company has a deep bench of classic movies, contemporary blockbusters. In addition to generating revenue at the box office, franchise such as Star Wars, Marvel films. And yeah, that's another huge thing too, is I don't know what direction they're going to go with the Marvel films, but if they continue producing Marvel films, that's obviously a huge market. People love those Marvel films. Star Wars, huge market. Those are going to be making a lot of money for Disney, cash cows. If they continue to produce those films, which they're probably going to produce them. The company has a strong balance sheet, including more than $8.7 billion in cash and cash equivalents. Hansen says the company is on solid footing for the next year to 15 months, even if the bug doesn't improve, a situation he considers unlikely. Now here's the cons. So with everything, you want to always look at both sides before making your decision and do extensive and exhaustive research. Disney's earnings in the third quarter show that theme park and resort closure along with cruise ship sailing suspensions are a major threat to Disney stock. The company reopened Shanghai Disney in May. Hong Kong Disneyland also reopened in June but closed again in July due to the bug. In the recent quarter, Disney Parks experienced and Products segment saw an 85% decline in revenue. With live sports virtually shut down and no clear idea if, for instance, college football resume in the fall, the value of ESPN's holding is in question. That's true. I mean, ESPN, they host a lot of sports, right? If these sports aren't allowed to compete, they can't broadcast, the revenue from advertisement is going to be stalled. That might hurt the stock. It's understandable where they come from. Here we go. Okay. Let's see. Anything else here we got? Oh, here we go. Disney streaming service has benefited from the stay-at-home economy. That's a huge thing too. Going forward, that's something I'm going to definitely keep an eye on. That's my strategy. These streaming platforms, if people are still stuck at home, if schools don't reopen, if schools reopen and they shut down, guess what? The demand for these things is going to go right back up through the roof. Okay. When should you buy Disney stock? When it comes to adding Disney to your portfolio, industry experts reporting competing timelines. See, that's the thing too, guys. You're not going to have one consensus on what should or shouldn't be done, which is why you got to do your research. You just don't know. Some people say 150 and then it's going to go to 200. Disney stock is a buy at 127, he says. Just depends what you're looking at. Got a couple more things and then we'll be done. 2 value stocks to buy in August. This is from the Motley Fool. You got Walt Disney and Altria. This is not a video about Altria, but disclosure, I do own Altria. Alright, with shares trading at 115 at the time of writing, Disney stock is well off to its 52-week high. The company has missed out on the wider market recovery after the crash in February because business is vulnerable to the effects of the bug. The amusement parks, all souvenirs and all that good stuff they sell, and whether or not also too the Hong Kong thing is going to be crucial because they have a huge market overseas. If they can open up in those countries again and operate at max capacity, that's definitely going to play a key role in Disney's stock value in the future, I should say. S&P 500 closes higher for a 4th straight day, now just 2% from its February record as Disney rallies. S&P 500 within striking distance of all-time high. That's pretty insane. Looks like in March to April, that's when we got hit pretty hard. It was down 34% from the peak. And we are almost back to where we were in February. It's pretty crazy how quickly things change. Now, are we going to have another drop? Potentially. Nobody really knows at this point. We just got to wait and see. All right, let's see here. Disney said now has 100 million. So now they're saying they got 100 million paid subscribers. Disney shares popped 8.8%. Okay, so anywhere between 90 to 100 million is where they're at with their subscribers. And I'm going to finish off with this. This is the last segment. Dow Jones Industrial is up 373 points, and S&P is up 21.26. The markets are absolutely soaring. Who knows how long this streak will go for? Only time will tell. And our representatives are still negotiating, trying to figure out a deal. I don't want to talk about that today. This was all about Disney, and this is what we got with Disney at the moment. And to answer the question, I don't regret selling. It is what it is. I have a lot of other holdings. For those of you who are invested in Disney, best of luck. And let me know what you guys think, what your thought process was with getting it. And yeah, that's about it for now. Alright guys, thanks you for watching. As always, if you're not subscribed, don't subscribe. And if you like the video, don't forget to like. Until next time, peace.